Alright guys, let's talk about market manipulation here for a second. A lot of you still don't understand what this is. I'm going to teach it for you. I'm going to lay it out nice, plain, and simple. This is why I don't trade technicals. Right here, we have what can be called as a support and resistance level. An S/R level, support and resistance level. This horizontal line that I drew right here, this red line. Now, support and resistance is an area where price gets to, and then it reacts at that level. It reverses at that level. It hits that level and it goes the other way. So let's just look at this level right here, long term. Price came up here, screwed around right here, up and down for a second, came up, bounces around, does its thing, comes back down, comes up, screws around right here, reverses, comes back up, hits this level again, screws around, comes back, goes up, comes back to this level again, screws around, tries to go up, then comes back down and over. So this level right here will be considered a support and resistance level because price gets to it and then it reacts at that level. This is why I don't trade support and resistance. The idea behind support and resistance is that when price gets to this level, you want to buy. You want to buy right here. Or if it gets to this level coming from the upside and it gets to this level, you want to sell right in here. This is why I don't trade it, guys. Look what happens oftentimes. It can be done profitably. I know two people who do it profitably. Out of everyone in this Forex niche that trades technicals, I know two people that are consistently profitable, that I've seen them do this for years and years. But that's two people out of over 100 people that I know that trade technicals. Everyone else is still struggling, and I'll tell you why. It's market manipulation. Now, say you saw the price come right here, it reacted a little bit on this wick, shot up for a second, then came down low. Then it came back up to here. So everyone wants to sell right here. Everyone wants to sell. But then what happens? Price, instead of coming up, instead of coming straight down, it goes up a little bit, meaning that you would have been stopped out if you set your stop loss somewhere in here. And it didn't come back down immediately. It went up. And it confused people. So people get in right here, they sell, then it goes up against them, they get stopped out, putting a stop loss here and a take profit here maybe. And then they're like, okay, well now price has broken the support resistance level, so now it's going to go up. So everyone buys. And then as soon as they enter on a buy, it goes against them and they get stopped out again. Now price comes down here, it goes, it plays around, let's see what happened. Price got right here again. Everyone right here was like, all right, price hit this level, and then we had like a black candle go downward. So now price is going to go down. So everyone sells right here, and they place a stop maybe up in here somewhere. So they sell, price goes down a little bit, gives them a little bit of profits, but then boom, it gets caught, goes up, breaks through this level, hits everyone's stop losses, and now everyone in here is thinking, okay, well now we're going to go up, so it's going to buy, but let me just wait till it gets back here to this support and resistance level, so that way I can buy at the best entry, set my stop just below the support resistance level, and I'm going to be a millionaire. Price is going to go up, I'm going to make money. So then we go, price hits that area, so everyone's like, okay, sweet, we've got wicks right here, price is going to go up, I'm going to get in, I'm going to buy right in here, stop loss just below here, it's going to go up, you know, we're respecting this level, price is bouncing, okay, good, we're all set to buy. And then boom, now price breaks through it again. Like, it's just ridiculous. Like, like support and resistance to me is just like the fool's way of trading Forex, because it can be done, and I believe support and resistance has a lot to do with price action if you know how to trade it. But if you can't decipher price action, then you're not going to be profitable trading it. That's why I just don't do it. You see, something like this, if this move would have been like a higher high maybe, it would have been divergent on your RSI. I would have taken that. That's a stop hunt. Let me explain to you. We make money off of the stop hunts, off of the moves where the market makers go up and grab people's stops. Say, for instance, this right here is a support and resistance level. I'm just going to move this little horizontal line right here. All right, price gets here, screws around, goes up here, can't go any higher, screws around, starts coming down, goes back up, respects the level, back up, respects the level. Then it goes right here. So everyone who sold right here or up here, they have a stop loss probably somewhere up in here, just somewhere above the highs at this horizontal support and resistance level. And the price, people are expecting it's going to come down, you know, so they have a take profit somewhere down here, maybe even lower. This is a minute 15 chart. I don't know. All I know is people get in orders right here at the support and resistance level, and they place a stop here. So the market comes, it screws around back and forth, and then it goes right here, and then in this one wick, the price runs up within that same time frame. 20 pips runs up in that wick, stops everyone out who sold in here with a stop loss somewhere in here, stops everyone out before coming down. So how do you profit off of this level if you know price is going to drop, but you have a stop up here, you know, just to be safe? how the hell are you going to profit? Because everyone else who sees price shoot up like this thinks it's going to keep going up because, oh, we broke through the support and resistance levels, so the price is going to keep going up, so they buy. Everyone who sold here gets stopped out and they lose the trade. Everyone who buys right here with a stop loss below the level down here gets screwed over. You get screwed both ways unless you know how to trade it. But look at what our strategy does. Our strategy says, hey, whenever we have flat RSI bands when the market's in a range, for instance right here, look, bands are relatively flat. This one's slightly pointing downward. This is slightly pointing upward, but they are relatively flat. Relatively flat bands. They're not super pinched up. I'd say they're super pinched up if there's one band here and like another one here. Like that would be like a super tight pinch or whatever, skinny bands. These are relatively flat bands. RSI came on the main chart up here. Price came up, shot way up there. It would have been tapping this top band and coming out of it a little bit. If you would have sold right there, you would have had little to no drawdown, very small drawdown for the time frame you're on. You would have gone instantly into profit. Since you're scalping, we're going to get out quick, maybe like right in here or whatever. You would have easily caught maybe 15, 20 pips of profit. You're out. Market continues down. No stress. Everyone else who sold at this support and resistance level gets screwed. Everyone who bought thinking price would go out because there's a lot of momentum upward gets screwed. The ones who make money are the ones who understand market manipulation. I'm going to go over one example, another example. I'm just scrolling through. I'm going to just find, it's very easy to spot. This, for example, right here. All right, so we see the market was going up and up and up and up and up. Then it dropped for a little bit, and then it came up back to this area right here. Now, I'm going to draw this level out just so you guys can see it. It's an area where price reacts, so probably somewhere like that. Something like that. Maybe it's up here. Maybe right here. You know, I don't know. I'm just going to put right here. All right, so let's take a look at the psychology behind this, guys. Market comes up, hits that area, comes down a little bit. Comes up, hits the area, comes down again quickly. Now everyone's selling. Everyone's like, look, it's dropping like crazy. It's dropping like it's hot. I'm going to sell. I'm going to place a stop just over here. I'm going to get in. So then price runs up again, gets to that level. Maybe people re-enter again, sells right here with a stop a little bit higher. And then it runs up even higher. So everyone who had orders to sell right here at the tip of this wick has a stop just above it up here somewhere. Price ran up, stopped everyone out who sold in here and here and here and all throughout here. Price stopped everyone out, then made a drop, hit this level, started going up. So now everyone thinks price is going to go up because look, we're respecting our support and resistance level. But then as soon as it goes up, as soon as you enter a buy, instant drawdown. Price pulls back against you, goes down, 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 down. So let's take a look at our strategy. What does our strategy say we do? Our strategy says that we look for divergence, right? Divergence tells us which way it's going to go most of the time, as long as you get your other confirmations on time frames. So we've got divergence right there. Should I say we have a higher high, and right here the peaks are flat, generally flat, maybe slightly downward, whatever. Generally flat. My whole point here, of course, this isn't the cleanest setup. We want to see an initial peak. We don't want to see an initial high near the 75 level. This is just for an example, okay? So that being said, we saw the market come, make a higher high in the main chart. On our RSI, it's just a flat peak. You know, technically this would be like a lower high. This would be further up here. But this is an example of how our setups work. We would have been selling right in here, right at the same area it drops, and it would have dropped directly to our take profit, and then gone around and screwed with everyone else, and then come down even more. This is like, it's just such a great setup. Like, that's why I teach you guys divergence and RSI scalping and shark fins. That's how the market actually works, and a huge component of that is making money off of the market manipulation, making money where other people lose money. If one person is making money in the game of Forex, another person is losing money. So I just wanted to show you guys a little bit about market manipulation and how we make money and how our setups go in confluence against how everyone thinks the market works, against support and resistance. I don't trade support and resistance, and I probably never will, because it just doesn't work out all the time. You have to be a master of deciphering price action, looking at key levels, all this different stuff. So yeah, I hope this guy sort of clears us up a little bit more, and it also gives you a little bit of light as to how our strategy works and how we're actually making money past just spotting the pattern. I hope this gives you a little bit of insight as to the psychology of it. So that being said,